managers, when dollar rallies significantly, we let all our clients know. It's like euro is on sale today, yen is on sale today. Sometimes you can save another 100 to 150 basis point. And that's when you lock in for your future obligations, right?
Before we get started with the show, here's a quick word from our sponsor, Global Training Center. As trade compliance professionals, you want to make sure that your procedures and documentation are completed as correctly as possible to avoid any delays and possible fines. We provide a range of trade compliance courses that will fit your needs. From in-person or web training to recorded on-demand courses, we can train one or even thousands on your team through your learning platform or on our portal. We can even customize a private session for your team. Go to globaltrainingcenter.com to find out more.
Folks, we're in for a Simply Trade podcast show that's going to be a really good one this time. We have a lot of good shows. They're up and down, but this is going to be something that we haven't had a good discussion on. And we've got an expert that's going to come on to play is dealing with, whenever you're buying and selling, you've got, international transactions here. There's usually currency exchange in that. And, with that, we're going to get into some nitty gritty on what to look for and the industry and whatnot. But Lalo, I'm excited about this one. This is going to be a cool discussion, I think.
It is, and unfortunately, I'm so clueless about this topic. I mean, I know it's a factor or a something that importers, exporters need to be aware of when they're getting paid or when they're paying. The closest I can think of, and this might be a little joke or not, but I mean, it's somewhat true. And our guest is probably going to say, no, goofball, has nothing to do with it. But this is the closest I can get to is I live on the border here in El Paso, right, with Mexico. I remember when we were little kids, and we would go a lot to Mexico. My dad and mom, their families in Mexico, of course. And, we would, this is, the only difference between El Paso and Juarez here in our neighboring city in Mexico is that there's a border. Basically it's one big community. So it was interchangeable. We go visit aunts and uncles and cousins and all that. It's like if we were going down the block, right? We just happened to cross the border. But I remember this very clearly. We had dollars and we had to exchange them into pesos. I remember my dad's like, no, this one's too high. No, this one's too low. Oh, no, we'll get a better rate here. We'll get a better rate there. So that is like my best analogy I can think of. And again, John may say, no, dude, don't.
That sums it up really well.
Okay, great. Awesome. Okay, so on the show, Andy, we do have John Min. He came to us via our friends at NCBFAA. Thank you very much for suggesting him as a guest. But John, Andy, I don't know if you may have another kickoff here to this or not.
No, well, I've got, I'm gearing up for it, but, why don't you, or John, welcome to the show, but why don't you, tell folks who you're working with and your position and what you do?
Glad I'm here. It's Happy Friday from Washington, D.C. I'm the chief nerdy economist for Monex Group. And the Monex Group consists of three businesses: Monex USA, Monex Europe, Monex Mexico. In fact, if you go to Mexico City, go to the financial district, the most beautiful building there is about 24 stories. It's our building. And all three business units combined, we have about 3,000 people around the world. And we focus on only one financial asset, which is the foreign exchange. There's a risk management aspect of it, so we can help you hedge those volatile currency movements. And the second part is payment side. We are very good at delivering funds from bank account A to bank account B that requires conversion. Typically banks, it takes about 2 to 3 days for the money to show up in euros or the pound or the yen. With us, it takes about 24 hours. And I think we're the only one, I take it back, next to JP Morgan. So we're one of 2 or 3 financial institutions in the United States where you can get in contact with us Friday at 4:30, and we can have your Mexican peso in your local account within 30 minutes. So that's what we do. But we're very excited to be here because we work a lot of freight forwarders, custom brokers, wine importers, food importers, machine tool companies that buying parts from around the world. And of course, we also work with bigger companies, enterprise companies, because they got offices around the world. They got to repatriate their profit, or they need to make investment overseas. And we get involved in all sides of transactions.
All right, John. So the one thing that I'm excited about when I hear that you're calling yourself the nerdy economist, I love to talk about the cause and effect. Now, listen, you may have to draw me a picture. I'm dumb as a box of rocks. And as we go through some of this, there are things that I see as we get into this is that, okay, let's talk about this a little bit more. The more you understand, in my opinion, of the intent, the situation, the structure of business, if you will, and all, the better you would have to take advantage of opportunities that are out there in the business transaction. So we'll get into some of that. One of the things, as far as the exchange rate, I will say that as we're going through, you were talking about minimizing the risk. So let's first talk about, let's take a standard transaction that somebody is, in this particular case, you're saying you're dealing with freight forwarders and all that. I'm looking at it. Let's just say that I am a distributor in the U.S. and I have come across a product of some kind that I am going to buy this product. Let's just say it's from Europe for right now, whatever this widget is, and I'm getting it from a factory, and I'm going to buy a lot of it, and I have a purchase order out there. So let's say 100,000 units, and they ship 1,000 units at a time, all that. So with that, help me finish out the scenario of what you normally see. I mean, is this something that, all right, let's say it's Italian lira, and it's that's what it's an Italian company, or they're selling it to me, or I'm buying it in Italian lira, or should I buy it in US dollars, or where should I go? What do you normally see in contracts here?
Got it. First of all, Andy, I think you're dating yourself. The Italian
I was
lira
just say that.
disappeared.
Oh, that's right. It did, didn't it? Oh, gosh. I did.
I was about to say,
hey, listen, my memory's as long as a turtle's tail, too, so I forgot about it. That's euro.
Yeah, no, but I've been doing this for 30 years. I remember the day sitting at the trading floor when all these beautiful local currencies disappeared, the euro emerged, and the idea was for the euro to act as a counterpart to the U.S. because we didn't want the rest of the world didn't like the U.S. dollar dominance. So anyway, that being the case,
I thought for a while I missed the news that there was what is Brexit? Italixit or something. I don't know what it is.
Well, yeah, that's one of the reasons why we had a Brexit, because they want to have a national currency. But the pound never joined the euro in the first place. It's an island economy, and so we still got the pound. We got the Swiss, which is like an island, middle of the EU, but we got the euro, which is now the common currency in Europe. But now going back to the situation, the importer, in this case, distributor, number one mistake that we find a lot by American importers is like, I don't want to deal with foreign exchange. I can't figure out these numbers. They look foreign to me. Calculation is off. Let's just do in dollars. So they tell the supplier overseas, you know what, just invoice me in dollars. Let me pay you in dollars. I don't have to worry about this. The problem with that is that's almost like walking into 7-Eleven and getting a gallon of milk, knowing that it's double the price going into grocery store because there's cost of convenience. In this case, yeah, it is convenient for you to send dollars, but what we see is typically a markup. There's a cost to the convenience, anywhere from 5 to 10%. And the main reason is if I'm the supplier in Germany in this case, and they're going to pay me in dollars, let's say in 30 days, 60 days, 90 days. Well, within 90 days, it's like a lifetime in foreign exchange market because dollar-euro value could fluctuate. Usually it fluctuates anywhere from 5 to 7%. So to hedge myself as like an insurance policy, I will price it and then I will mark up 7 to 10% extra. You want to pay me in dollars? Fine. You have to pay 10% more in dollars so that in case the market goes against me, I am covered when I convert it to euros. Now, it's 50-50 chance, right? 90 days from today, I get the dollars. And I say, oh my God, the euro weakened during the past 90 days. I'm doubling my profit, but I'm not going to tell you. But if the market goes the other way, the dollar weakens significantly, and by the time I get the dollar and I don't recover my original price that I was expecting in euros, we also see this. We invoice you and say, sorry, the dollar has weakened. You got to make up the difference. But they never rebate you. So our recommendation is the best practice, always deal in local currencies. So you eliminate that markup. And the easiest way to do that is you just tell the supplier, bill me in dollars and euros. We call it dual invoice. And when you get the invoice with the euro and dollar, you just divide the numbers together and you compare to where the current spot market is, then you know exactly what the markup is. But you will definitely save more if you pay in local currency versus the dollar.
Well, that's where I was going, is that so the takeaway from based on this discussion is to deal with local currency, whether it's the euros or whatever country you're dealing with. All right, so that's a key thing, and with that, you can then watch that fluctuation when it's time to pay the invoice. If you see where the dollar is strong, it'll take less dollars in a sense to pay for that. So, all right, so here's the other. So if let's say that I get an invoice in euros, then I should pay it in euros. Is that right?
Exactly. Now,
and doing that is where I would go through a company like yours, a bank like yours or something, right?
Well, in the United States, our market share is still relatively small. When I say ours, non-bank entities like fintechs like us. If you go to other side of the pond, pretty much all the companies I know, they deal with fintechs or money service business because they're more sophisticated when it comes to foreign exchange because they're used to converting money. But in the United States, most of the companies are in the mindset of FX, I just go to my bank. We call it the monopolistic relationship. You go to your bank, and whatever the numbers they give you, you make the payments. Now, one thing that everyone should know, this is the second most common mistake people make. So they need to make euro payments, but they don't realize all foreign exchange transactions are over the counter. That's the technical term, which means they're negotiated. So if you go to 3 different banks, you're going to get 3 different pricing for the same transaction. If you go to 3 different traders within a bank, you're going to get 3 different pricing. And less sophisticated you are, higher the markup the banks will place on you. And the worst time to do it is Friday afternoon, calling from the airport on your cell phone. I need to send 100,000 euros to your branch manager. Oh, watch out. Your markup is going to be huge. And if you are just interested in these markups, just go to Google, type in FX rate scandals. You see all these banks getting caught because sometimes they mark up just too much. But that being the case, there's no one price rule, and the foreign exchange market is not regulated by any government entity at all globally.
Or medium-sized company, and I'm dealing with, large companies usually have, their internal accounting processes. They may have, and they deal with that and say, they'll pay for locally in their own,
they may have an account overseas. They can use that, or they can have multiple banking relationships, so you can bid it out if you want.
Right.
A smaller companies.
In the smaller or medium-sized companies in dealing with this, so it sounds like, again, the second takeaway here, one is, as we just said, purchase your goods in using the local currency. Second, when it comes time to actually paying that, you can shop that around a little bit here and all that. And as far as and how to do that, we'll talk through that. But basically, you're saying you can talk to different financial institutions or brokers or whatever that to, I guess, zero in on what would be the best company to execute your transaction. If I got that right, it's like maybe I'm okay. All right. So the results of that, though, here's what's key of what I'm hearing you now. Again, that's where I'm trying to make sure I'm trying to understand this as we're going through this. This could be a situation where you can dramatically improve or decrease your profit margin in this, or dramatically raise your cost of the transaction or minimize that cost,
which goes to your bottom line directly. Yeah. In fact, there is a professor at NYU, the Stern, their business school. His students, they do annual survey of the average profit, gross margin for different industries. In the United States, if you are distributor, wholesale distributor, your margin is about 10 to 15%. That's the average. But in the foreign exchange market, just comparing rates among different financial institutions, you could easily save 1 to 200 basis points. So if your profit margin is 10% and you can save 200 basis points, that's 20% improvement in your bottom line just by doing the transaction with someone who's willing to give you fair and competitive exchange rates, not, we call it jokingly, retail rates. So last thing you want to do is go to a bank branch and then do the wire transfer. Those are like 200 to 300 basis points above where the market should be. On $100,000, you're literally giving $3,000 to a bank plus your wire fee.
Lord have mercy. Okay, this is good. All right, Lalo, forgive me for jumping in there, but all right.
What I was going to ask, John, is so why is it, I mean, again, very naive, this is very new to me, but why is it that we see a published exchange rate? Is that just like a suggestion?
No. So in the foreign exchange market this is the largest financial market in the world. It's about $8 trillion per day. They bought and sold 24 hours, 7 days a week. And out of 27 trillion, about 93% of it are hot trades. We call it hot money. These are currencies being bought and sold by pension funds, hedge funds, big traders. They're just moving money, buy low, sell high, just moving money all day long. And that's how they make money. Now, for those guys, we call it wholesale rates or interbank rates. That's technical term. Those are the rates you see on Bloomberg, on the websites. So that's like the benchmark rate. But in order to get anything close to that pricing, you got to do about $30 to $50 million transactions like every day, because now you can play the wholesale. Now, if you're a small business, typically your invoice is anywhere from 30 to 50,000 per container of wine or whatever it might be. You're not going to get that rate. So that's why there's a markup. And that markup, there's no rules to what the markup should be. Less sophisticated, higher the markup. That I know because it has been documented.
And so, hence, I guess the how I kicked off the show, when my mom and my dad, when we would go and we would jump from exchange house to an exchange house because one would sell it higher or lower than the other. I guess. Okay.
Now, by the way, the one place you should avoid is Heathrow Airport Exchange. Their markup is 12%. Their markup is 12%.
It's like unreal. It's like, I can remember having, I need to get some pounds. Oh, no, I'm not doing it here. Or
no, don't do it.
I would
Heathrow
have some
Airport.
pounds and I want to convert it back over to US. And I'm looking, man, no, that
Yep.
And hotels at the front desk.
Well, because hotel makes money and whoever the provider also makes. So we have a double markup on that one.
Oh, good to know. I'm going to Heathrow in September. So
go to the ATM.
No.
Your markup is going to be about 2.5% on a ATM card.
Wow. Okay, cool.
All right. So here's something as we're going through and talking about it. So it's, I love this discussion. I asked this question where you're trying to minimize the risk. So when you're talking about minimizing the risk, are there, one thing you're saying, minimizing the risk as far as your your profit and loss or your added cost or whatever. So you want to, obviously whoever you're doing the transaction with, you're trying to maximize your benefit on the exchange. That's one thing. Are there any other things in the trying to minimize the risk? Are you in doing this financial transaction, are there any vetting of the entities of the people in the financial transaction here? Or are you doing anything, that kind of stuff?
Well, our counterparts are the world's largest banks. So we buy and sell to each other in a bulk. So that's it. Now, for small businesses in the U.S., if you're looking for financial institutions, banks are safe because they're heavily regulated either at state and the federal level. One thing you should watch out for is that out of 4,300 banks, about 4,200 banks, they don't do their own foreign exchange. So they're resellers of bigger banks. That's the worst case scenario. So if you're sitting in Texas, you're dealing with the community bank and regional bank. 99% of the time, you're dealing with Wells Fargo, U.S. Bank, JP Morgan. We call it corresponding banks. They're the ones who's actually doing it. Now, from Wells Fargo, corresponding bank's perspective, it's not really their customer. So there's already a markup that's huge. That's one. Number two, depending on the relationship they have with the community bank also wants to get a cut. So they add their markup. Therefore, sometimes you pay 3-4% above what you should be paying. Again, in dollar terms, on a $100,000 invoice, that's $3,000 to $4,000 hidden fee. By the way, when you get a bank statement at the end of the month, a lot of the small businesses, the banks will do the analysis to kind of say your wire fee is this or that, but they don't show you the exchange rate. It's hidden.
Interesting. So it's one of those things.
Yeah, if you call your bank to say, I want to see the exchange rate, some banks will actually charge you for it.
Oh, wow.
Well, because they had to pull a special report.
Well, to that point, I will also say, I guess, in looking at it, this is one of those things from an accounting perspective that, give some thought to the services that your financial institution that you're using is offering to you. So if it's kind of buried in there, then chances are they're not really a big player. They're, in that secondary or tertiary market. So it's like, okay, maybe I need to, it doesn't mean that everything has to go through there, but your international transactions, you want to deal with the big boys or the key players, it sounds like.
Yeah, Andy, but here's another drawback, another challenge for small businesses. Let's say you realize I need to shop around. So you're going to call another bank in your town to get the rates. They're not going to quote you because you don't have a bank account with them. So in order to get a second provider or get a second quote, you need to open up another bank account. And that's a very painful process. So you're kind of like captive to your bank. That's why fintechs like us exist, because we're not a bank, but we are licensed by 50 state banking commissions just to do the foreign exchange, international payments part. So your credit line, everything stays exactly the same with your bank. You only use us for the FX transactions, and we can onboard you in 4 hours.
That's excellent. Well, I'd say, again, this is one of those where, folks, we're going to have, excuse me, we're going to have John Min's contact information here. So if you have any more questions, I'm sure, he can, answer you or get you the right party or entity as far as to answer your questions. But as we're going through this, all right, there's another thing is that does in these international transactions, let's say that I've done all I need to do as far as I've got a contract, I've got a factory. I have vetted people in the parties to the transaction to say, are they on the denied party screening list? Or are they on the restricted party screening list, and done all that? Let's say now we're down to the actual nitty gritty of the actual transaction. Is there anything that you're doing in the background of saying, is this a good entity? This is a good person to do business with, if you will, or is this somebody listed on a government list?
That is done 100%. Every transaction we do KYC, know your customer, AML for potential money laundering, and behind the scene there's various lists of terrorist list, countries where we can then send the money, and we have to abide by that because our license in each state is dependent on us passing annual audit. If we do any type of transaction where money shows up in North Korea, we could lose our license.
All right. Well, I get that. So here's where I was going with that is that now let's say that I'm new to this deal and into international transactions, or I'm up and coming. I've got taken over and I'm looking at this going, hey, we need to do a better job of vetting internally to our company. I want to make sure that we're crossing the T's and dotting the I's as a good corporate citizen. In that, is this something where I could reach out to, your company and say, hey, I want to make sure we're doing things right. So I don't want to go through this situation, send you a financial transaction, and all of a sudden you flag it going, oh, wait a minute, we got a problem. Is that something that I can align with you or you with us and saying, is there a way to update my information using your information or something? How to make sure that?
Yeah, that's automatically done. And just to give you a very specific example, let's say you finally get an invoice from overseas and you want to put the beneficiary information into our platform. Obviously, they don't have a FET routing number. They have IBAN and different numbers. So you put that in. Well, behind the scene, we verify that it's a legitimate bank account. And we pre-approve. In other words, we don't send out your funds. We actually ping to make sure that it is who you think it is. And once everything is verified, then you're good to go.
Say, hey, folks, listen, John's given some great advice here, but this one right here is one of those, even in the midst of international transactions, this is a key factor that basically, if I'm using your services, you've got my back. You're doing some checking for me on my behalf. I can tell you that I have consulted with some of my clients in the past that were doing some business. They had been working on a deal for 18 months. Had 2 different law firms involved. Supposedly everybody was vetted and all, and it was coming down to the supply chain and all that. And I happened to be brought in at the 9th hour, if you will. Hey, we just want to make sure all this is coming together, right. And all. Long story short, I mean, within the first 2 days, I'm reviewing information and I'm going, something doesn't seem to be right. Are you sure these folks are good? And it was dealing with a company out of South Africa. And in long story short, I went and they said, no, we've, 2 law firms, everybody's great, 18 months, And I said, have you provided any money? And there was a $350,000 deposit, and it was a multi-million-dollar deal. It was a $350,000 deposit sent to a neutral bank that was holding it before all the transactions were taking place. And within 5 days, I'm going, something's not right here. And so I had my own red flags and go, all that. Long story short, again, out of this, I will say that what we discovered was that there were people that were presenting inventory for, in this case, it was PPE. It was personal protective equipment, gloves and masks and things. And it turned out to be that they had some old inventory that had expired, and they were presenting it as we've got these, tens of thousands of boxes and everything else, but it was just smoke and mirrors and all that. And it took them probably 9 months to get that $350,000 back. In the midst of that, I was going, you guys are trying to handle this on your own. I would have gone through, somebody like yourself just to say, is this a legitimate entity? And it turned out it wasn't. But
now we only focus on the payment side, right? So we verify the bank account. We verify it is good. The money will get there. Now, if there's any fraud that's related to business side, that's outside. Right, exactly.
Well, and it was one of these that the account itself that finally that they were trying to get payment to was like set up real quick and all that. And it was like, something's not right here, folks.
Exactly. So, yeah.
So anyway, all right. That said, now let me ask you another question. The issue with like the U.S. has got sanctions against a lot of Russian entities, Iran, North Korea, all those kinds of things. And that stuff is added sometimes, very quickly, or new additions to all that. So as we're going through that, that's again something where you're staying probably current with the most recent additions and changes, aren't you?
Yeah, we stay almost real time current. And in fact, one of our largest team here is the compliance side. We just need to make sure that we're abiding every regulation and law that's out there. And that's why we get audited. And we have a running joke. We're running a bed and breakfast because we got bank examiners coming in from different states. It's crazy. We have to pay for their hotel expenses and meals. And they spend 3-4 days in a bubble. We have a special room. They go through every transactions to make sure that we're not sending money to Russia in a way, or the sanction company, or whatever it might be. And we have to pass that in order to maintain our license. So in many respects, we're risk averse. If there's any gray area, we don't take the chance, because once we lose our license, then we can't operate as a money transmitter.
All right. So now I'm going to change directions here. All right. Let's back away from this situation for a moment. We hear about the BRICS initiative, Brazil, Russia, India, China, Saudi Arabia, and some others that are striving to not use the U.S. dollar as one of the international currencies for exchange. From your perspective, how do you deal with that in terms where, people are asking for, the contracts, and they want to be paid in whatever, I guess it's still the local currency scenario there, but trying to avoid the U.S. banking systems or the Western banking systems and things of that nature. What's the impact of that on things?
Actually, there's no impact at all, because if you remember, I said it was $8 trillion a day that's bought and sold. Dollars involved about 80% of it. So other 20%, dollar is not involved at all. So our counterpart, our sister company in London, they sell pounds for their customers and buy euros. Dollar's not involved. They sell pounds and they buy yen. Dollar's not involved. Non-dollar trades, as I call it, is growing. You're absolutely right. Now, implication with that is we do think in the long run, dollar will get weaker. Right now, dollar is very, very strong, because if you want to buy any commodity products globally, 99% of the time they want dollars. So there is a built-in demand for dollars that makes the dollar very, very strong. So that's why the imports into the United States has been surging lately, because you really do get a great deal if you pay for things by selling dollars and buying local currency to pay your suppliers. Now, this is a separate topic. We're already looking into this, but we can't get into it. I mean, we can just flip the switch using stable coins, crypto, blockchain. You can move money instantaneously around the world. Brazil has a capital control. China has capital control. Argentina has a capital control. It's really hard to bring money in and out. It takes weeks sometimes. You got to do extra paperwork. With crypto technology, no government can get involved, and it will be done instantaneously, transparently. So in theory, we've been working on this project. You can sell dollars, but stable USD, and then use that to buy stable Indian rupee. And then on the other end, they can sell stable Indian rupee and convert it to local Indian rupee. That whole transaction will take only 20 minutes, both sides. We can do it, and we actually prototype. Only problem is we're waiting for clarification on regulation side. And we don't know when that's coming.
Well, regulations are usually way behind, governments
way behind.
And laws.
Yeah,
and
we're ready to go last year, but we're still waiting. Right. I know there's a bill that's going through the Senate as we speak that's tied to marijuana, the decriminalization, all that, but it's still very far away.
So what about freight forwarders and the brokers and all of that? In you're focused on, a key element there where you're supporting or providing services. What are some examples of how your services are used with the freight forwarders and all?
So, particularly in the intermodal side, so you're moving goods that requires different modes of transportation. So, as a freight forwarder or relocation company in the United States, I take the goods from U.S. or household goods, and I'm shipping over to Germany. But in order to make that happen, you have to pay a shipper. That's usually in dollars, but someone has to pick it up on the other side. Now that's a euro, and then it has to get on the truck. So that's a euro, and someone has to unpack it, deliver it. That's also euro. So these custom brokers, the relocation companies, they get all these foreign invoices every month. And when you put it all together, we're looking at a couple $100,000 to $1 million worth of obligation. Now, here's the problem, though. You get these invoices. You have 30 days, 60 days before you make the payments. If the dollar is gaining, strengthening, that's good news for you. You're getting discounts. But if dollar is weakening or it weakens, then those bills getting more expensive. And that's the risk that's involved with dealing with the local currency, the market volatility. We call it foreign exchange risk. But we can eliminate that by saying we can guarantee a rate today for 30 days, 60 days, 90 days, up to 2 years, by the way. And you don't have to pay for it, but we just lock it in. That's known as a forward contract. And a lot of our clients use forward contract to just eliminate the hassle of dollar going up, dollar going down. We guarantee the price that you like at that moment, and we lock it in, and you pay us later when you settle. So that's a forward contract.
And the benefit of that is that it is, from a planning perspective, I don't have to worry about this up and down. But basically, you're taking on that risk of the up and down.
Right. And now we can take one step further, which is, well, okay, let me lock in the rate for 90 days out so I don't have to worry about it. But what if I have a regret 90 days from today because dollar is doing so well and I have to buy it at the price that I committed to 3 months ago and I'm missing out on what's happening in spot market? Well, at that point, we can offer optionality to it. We guarantee a price for 90 days, but the 90th day, if the dollar is very well, you can just walk away if you want and just buy it off the spot. By the way, that's options contract. Very simple, plain options contract. So a lot of our clients start using us on a spot transactions, and then they want to manage the risk. They go to forwards, and then more sophisticated companies, they use optionality to give the flexibility to say, hey, if this sun is shiny 90 days from today, I'm going to take advantage of it. But if the dollar weakened dramatically, it's raining hard, then I'm protected. I got the umbrella. That's the optionality.
Well, at one point I had
guys, we got like 3 more minutes left, just so you know.
Okay.
Yeah. 3 to 5 minutes. Yeah.
No, I was just going to say that I at one point in my career, I had several different things where I was having to. I was dealing with mitigating some penalties on a global basis. I was dealing with some claims against bonds on a global basis. And so having to literally pay foreign governments or different entities. And I was watching it and I was saying, okay, let's hold this. It looks like the dollar is weakening a little bit. We need to hold off a little bit and see what happens. And then I'd have a drop dead. It's like, all right, we just have to bite the bullet on this. And well, usually it would come, it fluctuates, like you said. And then when it surged up, we're like, do it quick.
No. Actually, we call it Kmart. Is it Kmart Blue Light Sale?
Yeah, there you go.
We have a dedicated account managers. When dollar rallies significantly, we let all our clients know. It's like euro is on sale today, yen is on sale today. Sometimes you can save another 100 to 150 basis point, and that's when you lock in for your future obligations, right?
John, any final recaps here for our audience in dealing with it? I mean, one is paying local currency. 2 is the utilizing your shop around as far as for the transaction. Sounds like your company is a key player in that. Three is just keeping your eye on the market as far as those kinds of things like you just mentioned. And four is that this is another in your company's is a good entity to have in your arsenal in protecting yourself to make sure you're not doing business with somebody that, from a bad perspective on the financial transaction side of things.
Well, Andy, you summed it up. You summed it up really well. That's pretty much it. That's the lesson for today.
No, I love it. Well, folks, I'm telling you, we're going to turn this back over. John, what a pleasure to talk with you. I would love to get into some more things at some point. Maybe we can have you back and we can get into some more economic news and say, what if, cause and effect, all that kind of stuff. So it'd be great to do that. Lalo, anything from you?
No, I actually, again, being naive, I had some other questions. And John, we definitely need to have you on. I wanted to get like lessons learned from COVID that maybe be helping you now because of all the geopolitical stuff, because in logistics and in transportation and supply chain, let's just summarize it through that. In supply chain, we've learned a lot of lessons through COVID that now, like this, the geopolitical issues that are going, like the attacks in the Black Sea or Black Sea or Red Sea? Red Sea. Red Sea. The attacks in the Red Sea are not affecting the supply chain as much because of things that we learned from COVID, that now our supply chains are more resilient, et cetera. I'd like to know a little bit more about the resiliency of the financial markets as well, just because of things that we might have learned. But we'll save that for the next show.
Got it.
John, thank you, sir. Folks, I hope you have a great day. And like us, share us. Please, please, please do that. We are growing in popularity because of your listenership, and we just love that. With all due respect to everything else on that, I hope you have a fantastic day.
Thank you very much for joining us. Simply Trade is brought to you by the generous contributions of Global Training Center. You can follow the show and GTC on LinkedIn or Twitter and other social networks. Make sure you check out the show notes in the description for a full rundown of today's show with all the important links. Also, make sure that you share this with a friend and subscribe on your favorite streaming platform. We really like hearing from you. If you enjoyed the show, make sure to rate and review wherever you listen to this podcast. If you or someone you know would like to be a guest in the show or would like to sponsor Simply Trade or suggest any topic you would like for us to discuss, please contact us via email at simplytrade@globaltrainingcenter.com or you can DM us on Twitter at simplytradepod. Thank you again for the privilege of your time. Happy trading. Simply Trade is not a law firm or an advisor. The topics and discussions conducted by Simply Trade hosts and guests should not be considered and is not intended to substitute legal advice. You should seek appropriate counsel for your own situations. These conversations and information are directed towards listeners in the United States for informational, educational, and entertainment purposes only and should not be substituted for legal advice. No listener or viewer of this podcast should act or refrain from acting on the basis of information on this podcast without first seeking legal advice from counsel. Information on this podcast may not be up to date depending on the time of publishing and the time of viewership. The content of this posting is provided as is. No representations are made that the content is error-free. The views expressed in or through this podcast are those of the individual speakers, not those of their respective employers or Global Training Center as a whole. All liability with respect to actions taken or not taken based on the contents of this podcast are hereby expressly disclaimed.